Welcome to the Rigatoni Capital Podcast. I'm your host, Colin, and we are going to go over the markets today, and we will talk about maybe what to look at this week, and we will drink our coffee together if you're just waking up now. This podcast gets recorded before the markets open, and by the time it gets posted to like Spotify and YouTube, some of the news could be a little bit old because of how fast news and the war, things are happening super fast. So the purpose isn't to be a news show. The purpose is to discuss what it means to be a long-term investor, how to think like a long-term investor, like a buy and hold investor, a value investor, even a growth investor, but not a trader. It's not a news show. I'm not in the news business here. I think my niche is long-term investing on stocks and assets like Bitcoin, and certainly trying to give you like my point of view on things. If that seems interesting to you, I would ask you to please subscribe to the podcast and share it with your friends. And you also can follow me on Substack under Rigatoni Capital. I do a newsletter. And so briefly, like I said, not a news organization here at Rigatoni Capital, but WTI we know has surged last night, Sunday, into this morning, Monday, on March 9th. Well, I think we were above 114 on WTI. Brent crude was above 114. And I think we even dipped below 100 within the last hour right now. And it's 8 a.m. So like I think we're back to 100 right now. So there's reasons why, based off of headlines on how oil's trading. And don't try to trade commodities if you're not a commodities trader. I get if you are trying to hedge and you're buying VIX calls when the VIX was low, okay, like as insurance, and it's a fun little game for you. But this is trading is a big boys game, and if you're not in the industry and you're a retail investor, you're just gambling for fun. It's on your Robinhood and you have a few shares and you're just playing around like it's slots or something. Like, okay, that's fine. But that's not what my target audience hopefully is here. It's real money and investing as if you're a professional investor, but you're a retail investor. Does that make sense? I don't know. And hey, thank you for the birthday wishes on Substack. It was a wonderful birthday at with George Washington and it was cool. So the birthday's over, back to work. I posted this morning a Substack post titled Three Falling Knives on My Watch List. So if you've been watching this podcast, I keep discussing three assets in particular. I'll say probably like four assets in particular. These are stocks on my watch list that had dropped significantly due to a macro narrative, a macro backdrop. And they actually are financials. They're not like software stocks or anything like that. The first one is Goldman Sachs, which we discussed over the weekend here on the Rigatoni Capital podcast. I kind of put like what my thoughts were in writing to make it seem a little bit easier to follow. Same with American Express. I discuss the sell off, why it's selling off, and why in today's world, March 9th, there is a reason for Goldman Sachs and American Express to sell off, but do you want to pick the bottom here? They're both falling knives. As you can see, this is the American Express chart, and then I'll show you Goldman's chart. Do you want to enter these stocks now? I don't know where the stocks are trading as of this morning pre-market, but or do you want to be patient? And my suggestion right now is to be patient and to be suspicious and cautious about this market. And there's a few reasons why I say that. And the one easy one is that the S&P and the Nasdaq, and forget the Dow Jones for a second, major indexes here in the US, they have not really collapsed. They're not in a bear market. They're not even in a correction. Well, the S&P was only down a little over 5%. So why, and maybe that's why US decided to join Israel on these strikes with Iran when the market was hitting all-time highs. They thought they had enough cushion, and oil pricing was low back then. So, or low, I guess it was attractive. Pricing was decent. So maybe the reason the timing is when it is because the market was hitting all-time highs. Excuse me. So what I'm trying to say is, yeah, if we were in a situation that the S&P was in a 20% bear market and Goldman Sachs and American Express looked beat up and it looked like we could be entering into a recession, that's probably when I would feel more comfortable buying these two names, because you buy them once and you never buy them again. You buy them during March 2020 and you never buy them again. They're like once in a lifetime entries. But I don't own American Express. I don't own Goldman Sachs yet. One ETF that I have on my radar now, even more due to the Kospi in the South Korean stock market in Taiwan selling off, is the Freedom 100 Emerging Markets ETF. I keep talking about this ETF on the podcast and why I love this ETF and why it is my only international exposure and why I believe that it's the best way to play international equities and it's the best play on emerging markets. And I'm overlapping you here, the Kospi. Nope, that didn't work. Cos I'm overlapping you the Kospi and the Freedom 100 ETF. The Kospi was up 116% as of Sunday, sorry, this Sunday, and Freedom's only up 57% now. Over this is over a 12-month period. So Freedom is volatile now because of the Middle East and energy concerns in Taiwan and in South Korea. They rely on energy and fossil fuels and liquefied natural gas from Iran, the Middle East, that area, and the Strait of Hormuz. Lots of panic there. And by the way, the Kospi, arguably Samsung and SK Hynix, have been trading at ridiculous charts. I'm not going to say they're overvalued because I haven't done a lot of research on those names specifically, but obviously those stocks were like, they look like a bubble if you look at them on a chart. So yeah, this is a pretty good pullback and everything. I'm not buying the Freedom ETF. I do own it, so it would be an ad for me. And I would be happy to add it, but I'm not going to add it right this second. I think this is a time to just sit on your hands right now and be patient. And the reason is I'm not trying to time anything here, but I also like to see major indexes come back a little bit further. And I like to see, I am concerned, I am a little bearish in the short term, and we can get into that a little bit. So, like, you don't have to buy every dip. And my point is that this hasn't even been a dip. It's been a dip in software. It's been a dip in the Kospi, like Samsung and SK Hynix. It's been a dip in financials, and we'll get into that a little bit. Earnings Whispers is out for the week, and something like CNBC wants to talk about Campbell's, and they want to talk about Kohl's, and they want to talk about Dick's Sporting Goods. And I heard them saying something else on the headlines, but at the Rigatoni Capital portfolio, we're not talking about these retailers that make low margins and these old economy brick and mortar type of businesses. Not to say that they're bad, but that's not what we're talking about here. I'm only interested in Oracle and I'm only interested in Adobe. And I do see Centennial ones on here and Ulta Beauty's on here. Like, I'm really only interested in, oh, and AeroVironment is on this list for Tuesday. So if you guys are listening and you can't see this, it's just Tuesday afternoon. Oracle and AeroVironment both report Tuesday after close, and then on Thursday after close is Adobe. So in my opinion, those are the most important stocks that are reporting. And oh, that was a Hewlett Packard. HPE is reporting today, Monday after close. So yeah, I mean, again, I'm not going over news. I'm not a trader. I'm just kind of giving you the background because I think you need to know a little bit of the background of where we are. And because of this US-Iran war, things have really like are spiraling out of control. Like things are going in the wrong direction. Things are getting worse, in my opinion. It seems like the new disturbing news is we might have to put some kind of boots on the ground, right? And Trump didn't get his successor that he wanted and stuff like that. They picked, I can't pronounce his name. Somebody gave me a hard time about it. That's not what the show about is pronouncing people's name. Khamenei's son was chosen by the IRCG. Is that it? To be the successor. Not a political news guy. That's not my thing here. But so I apologize. I can't pronounce the old Iran Supreme Leader's last name. I don't. Khamenei. And then on one of the days, I asked Claude to break down everything that we need to know about Oracle earnings on Tuesday, AeroVironment's earnings on Wednesday. Remind me what these guys do. And we went over Oracle. We went over what to expect, the news driving it. I didn't read this, but kind of giving you an example how you could use AI in this situation. And then what Wall Street and analysts are expecting, what the street's expecting for Adobe and all that stuff. Here's a photo. Looking on the screen, I'm looking at the Kospi that ended the day down over there in South Korea, 5.96%. So as you can see, we had a bounce on Friday because the narrative, and it's a true narrative, investors bought the dip over here in the US. Like major MSCI inflows came in on the South Korean market. We saw a big bounce, and then overnight we saw the Kospi trade down about to like match its lows from earlier last week. Okay, so the Kospi did really bad last night. WTI, this is saying it's up 98. And this is not just a war on oil, this is also a war on wheat. Hormuz disruption ignites food inflation fears. And I think there's a lot of fear over this war right now. And Black Panther Capital writes, prepare for a 20% market drop on X. So he did. Everyone thinks the Iran conflict is an oil story. It's not. Let me explain what this is really about. The Strait of Hormuz has been closed for 8 days. Markets are focused on crude prices. That's the wrong variable. The real cascade nobody's mapping. 92% of the world's sulfur comes from refining oil and gas. Close Hormuz, you don't just lose 20 million barrels of crude per day. You lose the feedstock for sulfuric acid M, the single most produced chemical on Earth. That's how you extract copper and cobalt. And without it, you can't make transformers, EV batteries, or the substrates inside every data center on the planet. One chemical, one feedstock, 121 nautical mile choke point. It gets worse. It talks about like how Qatar ships 30% of Taiwan's LNG through Hormuz. Taiwan has 11 days of reserves. TSMC, the company making 90% of the world's advanced chips, draws 8.9% of Taiwan's entire electricity grid. So you don't have gas, you don't have power, then you don't have the chips. And not going to talk about it. It says S&P and NASDAQ are in a 5 to 10% correction base case. That is the base case. I agree with that. Tech growth would be down 10 to 15% on a base case. On higher yields and risk off, energy and defensives up 5 to 10%. Market is currently pricing in a 4-week conflict duration. If this extends, it would be more like 15 to 20% drawdown. I agree with this. If you're dollar cost averaging, you're good. Keep buying. If you are if you're trying to be a value investor and you want to see a little more value, then I would hold off on buying anything right now. And look, if things get resolved quicker than we thought and the market pops and the market does well, then just accept that you missed this one. I think a lot of us would all agree that buying in April during Liberation Day sell off where major indexes did pull back a good amount, that was a time to buy. And I did buy. And I think a lot of you guys bought and gals. And I think now is not the time to rush in and like try to buy the dip on anything. I wouldn't even buy the dip on software stocks. Like, I don't. We've been talking about not trying to cherry pick the bottom on those, like the Salesforces and the Workdays. And if you didn't own them before, I wouldn't try to chase the bottom in those type of stocks, the SaaS seat-based license type of stocks. And I wouldn't rush in to buy something like a Goldman Sachs and American Express either just now. I would wait a little bit and, like I said, accept that you missed it. We're not in a recession right now. We could be, but eventually, but the market is trying to time the next 6 to 12 months right now. Really, I think the market's only capable of trying to price in the next 6 months. I don't think it's capable of trying to price in the next 12 months. I think we're too short-sighted. I think the market's only trying to predict the next 6 months. So keep that in mind too. Maybe you can say 6 to 8 months. So the data that we'll get 6 to 8 months from now, the macro data, what will it look like? Obviously, there could be a small recession if oil prices keep spiking. So, and there's fear in with inflation, and there's more job layoffs or lack of jobs being added. It's not just job layoffs, it's the lack of the job market. There's not a good job market right now for younger individuals graduating. There hasn't been for a while. It seems like it's just not a great job market. Okay. And then, of course, oil's being choppy, which I was trying to say overnight, going into Monday mornings, going into Monday morning, the G7 to discuss possible release of oil reserves amid Iran conflict. As soon as this headline came out, crude, Brent, WTI all dropped really fast. You saw it drop extremely fast, extremely hard. So it's really volatile. Just stay away from trading, please. This guy wrote on X, Anderson Martin. He said, goodbye, fund managers. Goodbye, Bloomberg Terminal. No more $24,000 year subscriptions. Claude, just turned my laptop into a private quant analysis. Here are 7 prompts to build your own hedge fund at home. Not going to read these. What I'm going to say is these type of posts get viral. And as much as I would agree that they can be fun and helpful a little bit, they over exaggerate and they try to say that it just turned his laptop into a private quant analysis. No, it didn't. So Claude is not able to do that because I pay for Claude and I use it. And as good as it is and as impressive it is, it does not do what these people are saying it does. You have to do your own research as well. You can't just rely on Claude. And any LLM, it's making too many mistakes. And there are maybe better ways to do research with an LLM, and I'll explain that right here. I like this idea. Jordy Vesser's slide here he did last night. If you can see it, it says AI research skill architecture from podcast signal to equity ideas. What he's trying to say is he breaks it down. He does this in sections. His research is conducted in sections. For example, he grabs a script from a podcast like the All In podcast or something that's really interesting, like a podcast from experts on AI. And he extracts the transcript and he has AI analyze it. And he probably has a prompt for that. He transforms those themes into institutional analysis and that's when you go to look at stock ideas from the transcript itself, and he probably has a prompt for that, and then he does a separate prompt, more deep research, designs high leverage research prompts, and weighs evidence and resolves contradictions. If you can read it, I think my face might be covering it. But anyway, you can see like how he's breaking down prompts separately, whereas these posts on X, they give you just one prompt, and it's trying to say that it solves everything, and you're going to be so great once you have this, and once you do this prompt, it's going to answer it properly. It's not true. It's just I've never had success with these type of prompts. There's too many mistakes. It doesn't answer what you want to answer. Nobody's going to replace the Bloomberg terminal right now for you, other than like Martin Shkreli's app he built probably. All right. So I just wanted to mention that, and then I wanted to go to show you the VIX. We keep talking about the VIX because it has broke through this green resistance line that I have here that was at 29. This morning it's at 30. It went as high as 34, probably overnight. And you can scroll back and look at the times where we've been this high on the VIX. I mean, the last time was Liberation Day in early April 2025, August 2024. I can't remember what happened then. I'm drawing a blank. Obviously, COVID. And that's pretty rare to see a VIX trading this high. And that tells you that people are going to think it's a time to buy. It's a time to buy. The best saying is when the VIX is this high, pinch your nose and buy something, buy stocks. I'm just not into it right now, and I'm heavily invested. I don't really have a lot of cash on the sideline, unfortunately, and I think a lot of investors are heavy in margin right now too. Okay, and then I wanted to show you the Russell 2000, how what this chart looks like. As you can see, we easily broke the 50-day and the 200-day. We have a lot more room between where the IWM is trading versus where the 200-day is. Lot more room to go on these indexes. The financials, XLF. This is a reason why I'm not stepping in to buy American Express or Goldman Sachs. It's not that I like to buy falling knives. Normally I would buy this, but I think this type of sell-off is telling us a little more information that the market is really trying to price in a pretty bad situation that with either white collar job losses, recession, skepticism over the new Federal Reserve chair, oil pricing, the war, but the financials don't look healthy here. And hey, even like having to slow down on the capex for the hyperscalers. And that's a completely separate story than the software stocks that are getting crushed by AI disruption narrative. So a lot of reasons to be cautious right now, and look at this chart of the financials. I mean, since the year 2023, the financials have been great. And then they really pulled back during Liberation Day, and I think they're due for a pullback here, wouldn't you say? Wouldn't you say? And right here, I'm overlapping a photo of the IGV software ETF and the Bitcoin. And as you can see, they had been trading side by side with each other for a very, 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 very long time this year. If you just look at a year, 12-month period, both haven't performed well, of course. And right now, Bitcoin and the IGV are kind of going in the other direction slightly. So the IGV bounced and looks like it's kind of holding in there after the bounce. And Bitcoin, it went in the other direction last night. And that's because we got all the bad news coming out of the war on Sunday night. So I would look for Bitcoin to eventually trade again with the IGV. Can we all agree on that? Or do you think Bitcoin's going to keep selling off and the IGV is going to consolidate here for a while? So they're going to look like they're going in the wrong direction. My idea is that they continue to go in the same direction. They can both come back down, like the IGV can sell off with Bitcoin, or Bitcoin can bounce here a little bit and consolidate with the IGV for a while. I think the IGV, I'd love to know what the top holdings are. I can look at that right now, actually. Yeah, the top holdings of IGV are Microsoft is 10%, 9% of that holding, and Palantir is 8.65%. Oracle is 7.39%. Salesforce is 7.36%. AppLovin is 5.29%. Palo Alto is 5.07%. Intuit is 5%. Adobe is 4.62. CrowdStrike 4.18. ServiceNow 3.97. I will tell you guys this, even though I think Microsoft deserves to get whacked on the AI disruption narrative and the heavy reliance on OpenAI and the fact that Copilot has been meh, Microsoft will eventually, I think, do well in the long term because it's such a large, diversified business. And I think Palantir is going to do well because Palantir is not really like the type of SaaS name that I think of that would get disrupted by AI. Palantir is the AI. Oracle, that's a story for another day. Salesforce, I'm bearish on. AppLovin is not a SaaS company. It's software, but it's not SaaS, and it shouldn't be in the IGV probably. And Palo Alto and CrowdStrike, if anything, AI helps these type of businesses. And Intuit, same. Intuit, I guess Intuit, you could use another AI to do what Intuit does, sure. Adobe, Michael Burry bought Adobe last week. And ServiceNow, I'm not going to talk about because I don't really understand that business. But I think the IGV, looking at the top holdings, I'm surprised to see Palantir and AppLovin in there. My two favorite tech stocks today. Not a buy recommendation. I already bought those. I'm saying I'm saying those two type of businesses are built for this AI disruption narrative, Palantir and AppLovin. For one, their headcount is extremely small. I always say that. Palantir only has 4,000 employees. AppLovin has 1,500 employees. They are built differently than Salesforce that has 67,000 employees. It's a different business. And pretty much what I'm trying to say is, look, I think the IGV can bounce eventually. It's just going to take a while. But I think companies in the IGV, like a Salesforce, like an Intuit, they might not bounce for a very long time and they may continue to sell down. Who knows? So, not saying to buy the IGV. I'm just saying that if Bitcoin and the IGV both bounce together, I wouldn't be surprised. The SMH, which I own, the semiconductor ETF, is got. Let's look at what SMH. I'm curious if they have a lot of exposure to Taiwan Semi, which I think they do, because it's not a US, it's a MCI tracked market cap weighted index of semis, and that's true. Taiwan Semi is actually their second largest holding today at 11.10%. Nvidia's the 18.86% gorilla in the room, and then you got Broadcom, Micron, ASML, Lam Research, which is an unbelievable company, by the way. Check out Lam if you haven't looked at it yet. Okay, so SMH is just not down that much. I mean, I guess it is. What would you guys say it's down from the highs? The highs on SMH were February 25th. Okay, it's saying that the SMH, which is going to be super volatile, is down 12% from the highs of February 25th. And if you're looking at the video that I share, I think you got way more room to go here. I would just be cautious overall in the market. I would be cautious. And the last thing I wanted to say is I talked about banks and I wanted to recommend when you value the banks like a Goldman Sachs. I mean, the most important thing to do, guys, is to make sure you're not valuing it like a tech company. You're not looking at free cash flow. You can pick up your security analysis book, the Graham Dodd Security Analysis. This is like the Bible, some folks say. And I recommend going to chapter 52, which is market analysis and nope, I lied. Please hold. Okay, so what I'm trying to say is I don't know where I'm gonna. Can't remember where I was looking yesterday because I picked this up and then I start reading a different section and I got really disorganized, but I think it's here. This book is kind of outlining how to value like an industrial stocks back then. And but they do a section, they call a section the balance sheet analysis significance of book value. So that's giving you the approach of how to value banks. And then the next chapter is the significance of the current asset value. And yeah, that's where you're going to find it's like page 548 of security analysis, where they kind of give you an idea of how to value banks. You could Google it too, but sometimes it feels good just to pick up the Bible, and to give your eyes a rest from the screens. So I did this the other day. And the forwards by Warren Buffett and Seth Klarman. So good book, recommend it. I actually got this from my friend Matt from my birthday a few years ago. So that's it, guys. Enjoy the Monday and the hysteria. And I got those stocks on my watch list that I discussed, the Goldman Sachs, the American Expresses, and the Freedom ETF. I have those stocks on my watch list. Why can't I see myself? Oh, why can't I see myself? There I am. I have those stocks on my watch list. I even have the QQQ on my watch list, which is my top holding. Tomorrow or another day this week, if I have a chance, I'll show you my top holdings again and we'll go over them. Also, HIMS, and I own HIMS. I don't look at HIMS. HIMS is such a small little percentage of my portfolio, HIMS and HERS stock, that I don't really care what it does. I think it's crazy how volatile it is. And of course, it now did a deal with Norvo where they're going to both be friends again and sell their whatever GLP-1s. So they'll sell them together and be friendly again. I don't know if they were ever friendly, but now they're friends. So they're going to market and sell together. They struck a deal over the weekend. So HIMS is up 45%. It's so stupid. It's so dumb. But I own a little bit of it. I could care less what it does. HIMS. All right, guys, thanks for watching, and you can check me out on Spotify, YouTube, and a Substack under Rigatoni Capital. Thanks. Have a great day. Bye.